Hey everybody, welcome to Mortgage Talk Tuesday. The purpose of this really is just a new video series I want to be putting out once a week, just to educate home buyers on things that they should expect in the loan process, just to try to make your life a little bit easier and take some of the stress away of buying a home. Okay. Most of the horror stories I read, or I hear about from other clients, really. I think are a direct result of the lenders who they're talking with not properly educating them on what they should expect in the loan process. Okay, we've got these lenders out there promising the world, and that things are going to be so easy, and when it's ends up not being all sunshine and rainbows, that's when people get upset. Okay, the real truth is getting a mortgage is not easy. It's hard work. Okay. There's a lot of guidelines out there nowadays, a lot of regulations that need to be, handled properly and documented correctly. Okay, so that's really what the purpose of these videos are. I plan to try to set some proper expectations on some topics I'm seeing come up frequently, just to help make your life a little bit easier when it comes time to make that next purchase. Okay, so today what I want to cover is down payment money, specifically which money can and cannot be used. Okay, so I've been running into this one quite a lot recently, where people want to, they tell me they have $10,000 when I go and verify it on their bank statements. Maybe there's only 5 or 6 of that we can actually use. Okay, the reason for this is because money needs to be properly seasoned in order to be used for a down payment, or if it's not seasoned money, it needs to be properly sourced. Okay, so what I mean by that is basically any money that you plan to use for your down payment, if it got into your account, let's say it's your savings account, if that money got into your savings account within 60 days leading up to when you want to buy a house, we need to show a paper trail of where that money came from. Okay, if it's been in your account longer than 60 days, we don't care how it got there. Don't even worry about it. Okay, at that point it's considered seasoned, and we don't need any more documentation on it. Okay, we can use that. For deposits that are within 60 days, we'll need to do what's called source those funds. Okay, so let's say it's a direct deposit from your employer, your regular payroll check. That's no biggie, that's easy. We're going to see that it's from your employer. Okay, and that's, it's going to match up with the income that's showing on your pay stubs and your W-2s. Okay. Usually also not a big deal if you're transferring money from your checking account to your savings account, because we can see where the money originated from, how it got from checking to savings, and we can count that as part of the balance now. Where things get tricky is when we're talking about cash funds. Okay, let's say we get your bank statement and there's a ATM or a mobile deposit for a couple $1,000s. Well, we need to find out where that couple $1,000s came from. Okay, so if you sold something to get a couple of $1,000s, let's say you sold a vehicle, we're going to need an actual bill of sale signed by both parties saying that in order to use it. Okay, if you've got a long lost uncle who's paying you back on a loan that he owes you from years ago, we're going to need a promissory note, okay, to show the actual terms of that loan. What's another example? If you borrowed money from your 401k, we're going to need to get the terms of that loan, as well as the terms of your withdrawal to make sure you don't have any penalties for taking that money out. Okay, so just things like that. All it is a couple of extra documents, but when you add it to the long list of items you've already collected to send to the lender, that's where it gets stressful for people. So best practice really would be to just put the money, your down payment funds in a separate account. Okay, don't just keep it in there with your everyday checking, because then we're going to have to look at every single transaction that goes on in your day-to-day life. Just put it in a separate savings account. Try to limit the number of transactions that you're doing in that account leading up to when you buy a home. Okay, and if you do, make any deposits into that account, just keep track of, if it's a check, keep those canceled checks. If you sold something, keep the bill of sale. Things like that, and it'll make your life a million times easier when it comes to buy a house, and you won't be surprised when your lender's asking for this additional paperwork. So I think that's all. Thank you for watching. Feel free to share this, like, comment, share. If you know anyone who's interested in buying a house in the near future, I'd love to talk, speak with them. And if you have any questions, feel free to shoot me a message, and I look forward to talking to you guys again next week. All right, take care.